Small cap momentum can feel like chaos. I mean, these stocks explode, they pull back. But until you understand the cycle behind it, most traders react to the early spikes, chase, and they crash out before the real move really happens. So today I'm breaking down exactly what the penny stock life cycle is, how to recognize the phases, anticipate the traps, and time entries and exits like a pro. The first one, spike, day one, all the excitement, the euphoria, the catalyst drops. That's where EVTV comes in. So if you watched the previous video, hopefully you did, you'll know this stock is a perfect example of the penny stock life cycle. Because stage one is where all of that emotional first day surge driven by the news or catalyst. On the 12th, they had news, AI, biotech, pretty hypey, but it's a catalyst. So that initial burst, this stock yesterday morning gapped up from 48 cents to $1. That brings attention, brings in FOMO. But most people pile in and aren't ready for the real move. So going back to EVTV, you can see gapped up from 48 cents to $1 and then basically just did nothing. Just kind of sat there. People that chased, people that got euphoric, that didn't use a real trade setup, probably moved on and didn't capture the big gains. Now, if you noticed, after the market opened, this exhibited perfect example of a day one of the 3-day penny stock life cycle. Consolidated, broke out, broke resistance at $1.32, which was the Oracle entry signal based on technicals. So it hits that 132, explodes up into the 180s, consolidates, and then re-breaks out on day two for an epic move from $1.30 to a high in after hours of about $3.80. So $1.32, $3.80. Do the math. Massive move. So that's day one. We had low float stock, plus float rotation, plus a catalyst, plus a chart pattern guided by the technicals. Now we proceed to day two. Day two is where the grind, the day two reset as we call it. So you can see after that big onrush in after hours, this kind of darker gray area is after hours, lighter gray area is pre-market. Then we segue into the market day at 9:30 right here in the black zone. But this stock did exactly what almost all of these do on day two. It just, the volume faded, price action goes sideways. Now most newbies walk away and miss the secondary move. But smart traders were tracking this stock. I was all night, all this morning, prepared for another entry today. And this is where it was just consolidating. Like most traders just like forget about it. Oh, it's all over, I missed it. That 305 to 360 area mapped out by the Oracle algorithm, you can see it right here and right here, from about 5 p.m. last night to 10:30 this morning, it was just building, consolidating, trying to pick a trend. Now, those are the areas where as seasoned traders, we avoid it. We don't want sideways chop. I mean, nothing will drive you more insane than a sideways stock. We're waiting for the trend break. So now this consolidates 305 to 360, builds a nice base for, to build a trade plan off of. And then opened weak, pulled down, broke out of that zone at 360. Mind you, the Oracle algorithm actually had a better entry today than 360, 335, basically keying off of VWAP. So if you would have bought at 335, you would even had a better entry, but maybe you don't have the Oracle algorithm. You should definitely check it out, but maybe you don't and you just trade the technicals. You buy at 360, went to 490, you use that lower level of 305 as your stop loss. So once it broke, did pull back, never violated that lower level, consolidated at VWAP and broke to $4.90. So don't forget about these stocks on day two. Now, a lot of them gap down on day two and never bounce. Those are the ones you ignore. But the ones you always want to have on your watch list and always be prepared for is the stocks like EVTV that consolidate near the highs, and then we trade the break of that. Now, that being said, day three is coming. Okay, we're starting to proceed into day three. This is the decision day. Okay, this is where this stock is either going to survive or begin that fade back, the long kiss goodnight, as we say it. Now, a couple things about day three. this is a great way if you're a short bias trader. If this stock breaks support, you can hammer these stocks on the backside as a short seller. Now, the significant thing about day 3 is if you're a long bias trader, if this stock can make the day 3 move, they become great longs. That's why we love these stocks using technicals, whether it be long or short, because we can key off of that big onrush of buyers or big onrush of sellers. Now, day 3 is key for this stock. Now, in my opinion, with the way it's closing right now, probably going to repeat what it did last time. So let me jump over and show you how, one of the most common phrases you'll hear me say, history doesn't repeat, but it rhymes. This is why I always want you using the long-term chart. Because look at EVTV just a few months ago, back in September, 3-day run, explosive move, basically went from $2.50 to a high of $5, but look at what happened on day 3. That collapse, okay? That drop. That's where the short sellers cleaned up and the smart longs that use technicals stayed away. Then after that, gap down the next day and long kiss goodnight. So if you're looking at this chart, I gotta believe you're seeing what I'm seeing and a repeat of that exact pattern. Huge onrush, big explosion of volume, and then the euphoria ends and the stock fades back. So as a long bias trader, you always want to be keen on day 1, day 2, and only the squeeze point on day 3. Because unless this stock breaks the previous highs, it's probably going to follow exactly what it did. So now you know, as these trades start to get long in the tooth, as we say in the Midwest, you can just stay away and only trade the squeeze point. Now, if you're an agile trader, long and short, just look for that breakdown of support on day 3, because that's by the time everyone's forgotten about it, they've moved on to the next shiny object. I mean, we got a stock Aton up 170% today, Xair up 150% today. So the market is always rotating to the next shiny object. So focus on day 1 and day 2 as a long bias trader. As a short bias trader, focus on day 3. So that being said, plan, react, don't anticipate, don't chase, don't fall for the euphoria. Understand that 99 out of 100 stocks follow this 3-day pattern, and the sooner you recognize it, the more you'll be inclined to take profits on day 1 and day 2, not become a bag holder on day 3. And again, if you're short bias, you just stay away for the first few days because you know the clock is ticking till the big washout happens. So if you want daily trade ideas using this cycle, grab our free watch list below and trade smarter. 5 stocks every single week, 100% generated by me. Hit that link.